Imagine waking up, grabbing your phone, and seeing that your bank account balance has grown while you were fast asleep. This is the true allure of passive income. But let's be absolutely clear from the very beginning. True passive income is not a get-rich-quick scheme. It is not a magic button that creates money out of thin air. Building sustainable passive income requires an initial investment. You essentially have two currencies you can invest: your time or your hard-earned money. In this masterclass, we are going to focus entirely on leveraging your money. We will explore how to put your capital to work so you don't have to. We will be breaking down 4 highly effective, accessible ways to make your money work for you, step by step, so you can start building your wealth today. Let's start with the absolute foundation and the easiest method, the high-yield savings account. If you are keeping your savings in a traditional, big bank, brick-and-mortar checking or savings account, you are making a massive mistake. Traditional banks often pay a fraction of a percent in interest. Meanwhile, inflation eats away at the purchasing power of your money every single day. Online banks, with lower overhead costs, offer significantly higher annual percentage yields, or APYs. They pass their savings on to you. It is the absolute perfect place to park your emergency fund, or any cash you are saving for a short-term goal, like a house down payment or a vacation. If you have cash you won't need for a set period, certificates of deposit or CDs are another great option. By locking your money away for a term, say 6 months or 5 years, you are guaranteed a fixed interest rate for that duration. This rate is often higher than a standard savings account, providing a reliable, predictable return on your investment. The catch? If you withdraw the money before the term ends, you'll face a penalty. So only use funds you can afford to set aside. Now, let's step into the stock market with dividend investing. This is a classic method for building passive wealth over time. When you buy shares in a profitable company, they often distribute a portion of their earnings back to their shareholders. These payouts are called dividends, and they provide a steady, predictable stream of passive income directly to your brokerage account. Smart investors focus on dividend aristocrats, companies that have consistently increased their dividends for over 25 consecutive years. By reinvesting these dividends to buy even more shares, you trigger the powerful mathematical force of compound interest. If picking individual stocks sounds too risky or time-consuming, index funds and ETFs are your best friend. Instead of trying to find the needle in the haystack, you simply buy the whole haystack. It's instant diversification. An S&P 500 index fund, for example, allows you to own a tiny piece of the 500 largest companies in the United States. Historically, the stock market has trended upwards over the long term, averaging an annual return of around 10%. This is the ultimate set-it-and-forget-it strategy for long-term passive wealth accumulation. No daily monitoring required. To truly make investing passive, you must harness the power of automation. Remove the human element of hesitation. Set up automatic transfers from your checking account to your brokerage account every single month. Pay yourself first. By automating your investments, you remove the emotional aspect of trying to time the market, which usually leads to losses. This strategy, known as dollar-cost averaging, ensures you're consistently investing whether the market is up or down. What if you want to invest in real estate, but don't want to deal with tenants, toilets, or a massive down payment? Enter real estate investment trusts, or REITs. These are companies that own, operate, or finance income-producing real estate. You can buy shares of a REIT on the stock market, just like you would buy shares of Apple or Microsoft. It's that easy. By law, REITs must pay out at least 90% of their taxable income to shareholders as dividends, making them excellent income generators. Another modern approach to property investing is real estate crowdfunding. It brings institutional real estate to the masses. Online platforms allow hundreds of investors to pool their money together to fund large-scale commercial or residential projects. You can get started with a relatively small amount of capital, gaining exposure to institutional quality real estate that was previously out of reach. You earn passive income through your share of the rental income, and potentially a lump sum when the property is eventually sold. Keep in mind, these investments are typically illiquid, meaning your money may be tied up for several years. It's a long-term play. Finally, let's discuss our 4th strategy, peer-to-peer, or P2P lending. This method allows you to literally step into the shoes of a bank. Instead of depositing money in a bank, you lend your money directly to individuals or small businesses via online platforms. Because you are cutting out the middleman, you capture the spread, earning significantly higher interest rates on your capital. However, with higher rewards come higher risks. If a borrower defaults on their loan, you could lose your investment. The key to mitigating this risk is extreme diversification, spreading your investment across hundreds or even thousands of different loans. If you prefer investing your time upfront rather than your money, creating digital products is an incredibly powerful strategy. Think about ebooks, online courses, software, photography presets, or digital templates. The options are endless. The beauty of a digital product is that you create it once, and you can sell that exact same file an infinite number of times. There are virtually zero manufacturing costs, no shipping fees, and no inventory to manage or warehouse. Once your product is live and your marketing systems are in place, sales can happen 24/7, even while you sleep. Similar to digital products, print on demand allows you to sell physical goods without the hassle and cost of inventory. You create unique designs for t-shirts, mugs, phone cases, posters, or even home decor. You just upload the art. When a customer places an order, a third-party manufacturer prints the design and ships it directly to the buyer for you. Your only job is to create appealing designs and drive traffic to your online store. The fulfillment is entirely hands-off. While passive income sounds amazing, it is crucial to manage your risks to protect your hard-earned wealth. Never invest money that you cannot afford to lose, especially in higher-risk assets like P2P loans or individual growth stocks. Always maintain a fully funded emergency reserve in a high-yield savings account before diving into riskier investments. Diversification is your shield. Don't put all your eggs in one basket. Spread your investments across different asset classes and platforms. So how do you get started today? Here is your beginner action plan. First, audit your finances thoroughly. Second, build that emergency fund. Aim for 3 to 6 months of living expenses safely stored in a high-yield savings account. Third, choose just one passive income stream to focus on first. Don't overwhelm yourself by trying to do everything at once. And finally, automate the process. Set up those automatic transfers and let consistency do the heavy lifting for you. Building passive income is not a sprint, it's a marathon. It requires patience, discipline, and a long-term perspective. The seeds you plant today will grow into the financial shade you enjoy tomorrow. It takes time, but it is worth it. Start small, stay consistent, and watch your passive income grow over time, bringing you closer to financial freedom. Thank you for joining this beginner's blueprint. Take that first step today and take control of your financial future. You've got this.